Okay, welcome back to the of accounting. This video, we want to look at the question or the preparation of the financial statements, and we are going to look at the preparation of statement of comprehensive income in particular, that is income statement. So this is a question paper of September 2024, and we are going to look at question one on that question paper, and the the question reads, needs limited. You are provided with information for the financial year ended 29th February 2024. Required part 1.1, complete the statement of comprehensive income in brackets income statement for the year ended 29th February 2024. The question is 22 marks. And we're going to look at the first part of that question, which is 1.1. So going down the question, we've got a note that we have there, which reads some amounts have been entered in the answer book. Then we're given information, first part, information A, we're given balances and totals on 29th February 2024. Going down, these are the balances that we are given. Here's a list going down. Then we've got our next page. You need to go through all the information before you start to answer the question. Then our next page, you're given adjustments and additional information, ranging from additional information number 1, going down to additional information number 13, year, which is the last one. So you need to go through everything before you start to answer the question. And then on our income statement, if you go to our answer section, you see that this will be what will be given in the answer book. So you're seeing that some figures are pre-entered. So we are starting to enter from other operating income there. That's where we're going to pick some other operating income that are there in the question. So we already have bad debts recovered, which has no figure that is going to be entered since it's shaded there. And then sundry income also no figure to be entered, shaded. Then we go to the question, try to see if you've got any other income that is given in the question. So we can go there. So obviously you are going to go and look at each and every balance that you are given to check if it applies to be under other income. You try to see. You go down, checking. So you see that we have our commission income there, which is here. Before commission income, also we have rent income. We have commission income, rent income, these two incomes. And also, so these are the ones that we have at the moment. So we can just try to start by rent income and try to calculate it, which is 258,300. But obviously, you don't enter the figure as it is. You go to additional information to see if we've got anything that explains adjustment of the rent income. So if you come here, obviously, you're going to come from the beginning of the question of the additional information going down, checking any adjustment that we have of rent income. So you'd see that we have 1 year, which says the rent was increased by 2,700 on 1 July 2023. Rent is received 1 month in advance. So what we are going to do is we are just going to identify our year. So our year is ending on 29 February 2024. And it means it started on 1 March 2023 and ending on 29 February 2024. So this is our financial year. But our income is being said that it was increased by 2,700 on 1 July. So it means the months that this rate was increased is July, August, September, October, November, December, January, February. And the last statement is saying rent is received 1 month in advance, which means for March also 2024, it was received also. We have 1, 2, 3, 4, 5, 6, 7, 8, 9. So we have 9 months after it was increased. So before it was increased, remember it started March 2023. So we have March, from March to end of June when it was increased. So we are saying March, April, May, June. 1, 2, 3, 4. 4 months when it was not yet increased. So let's just assume our rent is X. Let's assume rent before increase is X. So having that now, we can now be able to say before it increased was 4 months. So if you say 4 times X, which is 4X, is what we have before it was increased. Then after it was increased, we have 9 months plus 9 times it was increased by 2,700 X plus 2,700. X plus 2,700. And then having done that, we close our bracket equal to the total that you are given in the question. We can just recheck it. The total that we are given in the question is rent income 258,300. So it's equal to 258,300. Uh, 258,300. So we are saying here, this is our equation. So we are saying 258,300. So having done that now, we can now remove the brackets and it will remain as 4x plus our 9x, and then we say 9 times 2,700. There, let's try to calculate 9 times 2,700, and you are going to get a 24,300. So here we say plus 24,300 equal to 258,300. Then we group like terms 4x plus 9x, we're going to get 13x. And then obviously we take 24,300 the other side, it becomes negative. So it's 258,300 minus 24,000 minus 24,300. There is 24,300. Right. Having done that, now we can say 258,300, and then we subtract your 24,300. And you're going to get your 234,000. Obviously, we divide by 13 both sides. We do that, x becomes 234,000, you divide it by 13. You remain with 18,000. You remain with your 18,000. So this is rent before it was increased. So after it was increased now, remember, we want to remove the one that was paid in advance. If you go back to the explanation that we are given there, it's saying the rent is received 1 month in advance. So this is an in advance a receipt that is there, or a prepayment of an income that we have. And we know that we have to remove it since it doesn't belong to this period. Remember, we're trying to comply with the GAAP, generally accepted accounting practice, which says matching principle or accruals principle. So what doesn't belong to this year, we don't have to record it this year. So the rent for March 2024 doesn't belong to this period, so we have to subtract it. So we calculate it there when it was increased, because March it was already increased. March 2024 it was already increased. So we are going to add. We are now going to say the rent now is now 18,000, and then we add the increase that was there, 2,700. And we see you're going to get your 20,700. So this is the rent that you need to subtract from 200 from the total the total for that period. So we are saying the rate that you are given in the trial balance, which is let's try to see The rent income that we have there, which is 258,300, we are going to subtract the 20,700. So we go to our answer section, and we are saying rent income. Here we put rent income. Then in brackets, we just summarize the working by saying 258,300, and then we subtract your 20,700. Right, we calculate it like that. You are going to get your 237,600. So this is the answer that we have. And then now, obviously, we also have commission income that we identified there. We can go back to the question. Right, commission income is a question mark. We are seeing here, which means we can try to see in the additional information if you are given a hint to calculate that commission income. But on the first part of the additional information, we have something there, which is saying commission income for the year has been received in full at a rate of 4% of total sales revenue. 4% of total sales revenue. So we come here, in our sales, we have got 20,035,000. So we are going to say 4%. 4%, remember, is a decimal. If you say 4 over 100, it reduces to 0.04. So we are going to say 0.04 times the figure for sales, 20,035,000. So this is what we have. So we go there on our answer section and enter search. So we are saying commission income, commission. In brackets, we are saying 0.04 is a decimal, 4% times 20 million times 20 million and 35,000. 20 million and 35,000. And then the other that we are supposed to get is 801,400. 801,400. So this is what we have. So having done that, we now try to see if you have got any in the list of balances that we are given, any income. So you go down, you see that we don't have any other income that we are seeing there. So there are other income that can apply that we need to check before we go to the expenses section. Those they can be income. It can be an income, it can be an expense. So we need to check them before we leave the other income section. Remember, we have trading stock, trading stock deficit or a surplus. If it's a deficit, it's an expense, we need to put it under expenses. If it's a surplus, it's an income, put it under other income section. So we need to check it according to the question that we are doing, whether it applies under income or expense, so that we don't omit any income. Then also we have a provision for bad debt adjustments. Provision for bad debts adjustment. And we know that for provision for bad debt adjustment, if it's an increase, we are going to see an expense. So we put it under expenses. Then if it's a decrease, it's an income, we have to put it under other income. So we have to check whether it applies there or there. Then also, we have the issue of profit or loss on disposal. If there is any current asset that were disposed, so if it's a profit, it's an income. If it's a loss, it's an expense. So those three are very critical. We need to check them before we go any further. So we can But according to this question, we do not have any non-current asset that was disposed. So we can leave it. Then we check trading stock, deficit or surplus, and provision for bad debt adjustment. So let's start with trading stock, deficit or surplus. So you know that the formula that we use to calculate trading stock surplus or deficit, we say the book value that we are given minus the physical stock count figure. So if we get a positive figure, it means our book value is greater than our physical stock count figure, and it will be a trading stock deficit, and it's an expense. If it's a negative answer, it's a surplus. We need to put it under our other income section. So we go there and check what do we have. Remember, trading stock is given in the list of balances. So the one that are given in the list of balances represents the book value. And we check if there are any adjustments that are going to adjust our book value that we are given in the list of balances. 982,400, and then we go to additional information. Then if you come on additional number 4, it's saying electronic equipment was donated to a local children's home. Gross profit of 22,400 has been forfeited on this stock, and it been sold. The markup on this item was 35% on cost. The bookkeeper is not yet recorded this entry. So automatically it means the business that is in question of this question that we are doing, it means it was engaging into the buying and selling of electronic equipment due to the issue of the markup that is being attached to the donation of this electronic equipment. So it means it's going to reduce our trading stock. So we need to remove it from the trading stock so that we get the net book value. So, but we are given only the gross profit amount, which is 22,400. We know that when we say cost price plus our gross profit, our markup, which is our gross profit, our markup, we get our selling price. So according to this question, our markup is 35%, and our cost price is always 100%. So if we add the two, we are going to get 135. So we are given 22,400 representing our 35. So the figure that we are looking for is the cost, which is 100. So we are saying our 35 is equal to 22,400. What about 100? This is what we have. So what the figure that we don't have is 100. The figure that we have is 35. The given figure is 22,400. So what we are going to do is we are going to say what we don't have becomes the numerator. What we have becomes the denominator, 35, and we multiply by the given figure, 22,400. We do that, we get the cost price. So we say 100, we divide by 35, answer that we get, we multiply by 22,400. We're going to get to 64,000. So here it means we've got 64,000. So this is the cost price of the equipment that was donated. So we need to remove it from the book value that are given in the list of balances to get the net book value. Then we compare it to the physical stock count figure on item 5, which is the physical count on 29 February 2024, reviewed the following. So we are only taking the value of the trading stock, 923,200. So what are we saying? We are saying, let's just try to see. Right. What we are saying is the figure that we are given in the list of balances. Let's go back. We're going to subtract 64,000. Trading stock, we're given 982,400. Then we subtract 64,000. Then we get the net figure. Then we subtract now the physical stock count figure. So we go to our answer section and summarize the search. You come here. Before we go there, we want to identify whether it's a surplus or a deficit. So we are saying our 900, let's just we try to put the working here. We are saying our figure that we are given in the list of balance is 982,400. Then we multiply 64,000. Then I will find what figure do we get there. 982 minus 64. and then you get 918. So you get 918,000. Then you compare it with the trading stock figure, 923,200. We see that our book value is less than our physical stock count figure, which is we are going to get a negative answer, which represents a surplus. So we are having a surplus, which is supposed to fall under other income. So we just go and summarize that working under other income. So we are here. We are saying trading stock surplus. Trading stock surplus, whereby we are saying 918,000 minus 923,200. And then the answer that we are supposed to get is 4,800. So this is what we have. Then we can as well go and try to see if you've got any other income that is there. Remember, in the list of balances, we've exhausted all the incomes that are listed there. So you can go item by item, try to see if you have got any other income. Say the issue of provision for bad debts adjustment, again, we'll try to check it, the additional information. But if you come, let's try to see. We go down. We try to identify if you where we are stating, where it's stated about provision for bad debts adjustment. So you go to item 3. Here it says the increase in the provision for bad debts by 6,500 was not recorded. It's an increase. Remember, when we say this, if it's an increase, it's an expense. So we're not going to include it under the income. We include it under expenses. Then we check other adjustments that can lead us to an income. You go item by item before you leave the income section, the other income section. So you see that this is the last income that we have. Then we can go there and try to see there, but the figure for other operating income now is already entered because we were supposed to add whatever we're having in this box so that we get this total. But it's pre-entered, so we're going to leave that. And even the gross operating income figure is pre-entered, so we are just going to leave it. Then we go to the operating expenses section. The insurance, we are not going to enter it. Depreciation, we are not going to enter it. Shaded. So when it's shaded, it means we are not going to enter those figures. Then beneath our standard expenses now, we check expenses that we're having in the list of balances. So we can check the expenses that we are given there and see which one can we start with. But if you go down the expenses, you would see that we have got the issue of director's fees. Here we have got director's fees. So we can just try to see if we have got any adjustment that is affecting director's fees. Remember, after identifying the expense, you don't have to put it as it is. You first check if there are any adjustments that are affecting director's fees. If they are not, you can check the figure as it is and put it in the statement of comprehensive income. So 1,307,840. We go to additional information to see anything explaining about director's fees. Right. We go to item 7. Item 7 reads, the director's fees includes 385,520, which is the yearly fees of Ms. Jabu, the sole trader at the beginning of the financial year, and an additional director appointed on 1 September 2023 received the same fee as Ms. Jabu. Director's fees increased by 8% on 1 May 2023, and both directors have been paid their fees for March 2024. So what does it mean? It means we are supposed to identify, because if you go back there, we are seeing that an additional director was appointed on 1 September 2023, received the same fee as Mr. Jabu, And we are being that directors' fees increased by 8% on 1 May 2023. And both directors have been paid their fees for March 2024. March 2024 is a period outside our financial period. So there is a prepayment of directors' fees for both directors. So we have to find that fee for March, and then you multiply by 2 to make it for two directors, since they are being paid the same amount of directors' fees. But we are given a hint at the beginning of the explanation that the director's fees includes 385,520, which is the half yearly fees. So this one is for 6 months. But inside that 6 months, we are seeing that it was also increased inside those 6 months on 1 May 2023. Remember, our year is starting on 1 March 2023. So we say March and April, it was not increased. Then May going forward, it was increased. So we are seeing that part of those 6 months, which are 4 months, starting from May. We are saying May, June, July, May, June, July. Then we have August, which are 4 months. Then the first 2 months, we are saying March and April. So if you say 1, 2, 3, 4, 5, 6, which is 6 months, which is the half yearly that we are talking about. So we can just try to come up there with an equation that will lead us to the director's fees monthly after it was increased, and then we can multiply by 2. So what we are saying is this 385, 520 is for 6 months from March 2023. Then March and April, for the first 2 months, it was not increased. Then May, it was increased. From May, we count another 4 months. So for 2 months, we are saying, so we let the monthly director's fees to be X. So if we say 2 times X, which is 2X, before it was increased, 2 months, then the other 4 months, it was increased, which is 4. And it was increased by 8%. So if we say X times 1.08, 8%, remember, we are going to say 100 plus 8, 100% plus 8% to get 108%. And to convert to a decimal, it becomes 1.08. Then you multiply by X. It was now increased 1.08. Sorry, we are multiplied by 1.08 like this, and then we get your 1.08x. So this is the director's director's fees after the increase, and it was for 4 months. So we are going to say 4 times 1.0x, and if you add the 2, you get for the total for the 6 months now, which is 385,520. So having done that, obviously we are going to say 4 times 1.08, which is going to be 4 point. Let's try to see 2x, and then we add 4 times 1.08. We are going to get your 4.32x. 4.32x, which is equal to 385,520. And then when we say 2x plus 4.32x, we are going to get 6.32x equal to 385,520. And then we divide by 6.32 both sides. And we're going to remain in x is equals to, so if you say 385,520 divide by 6.32, you're going to get your 61,000. So 61,000 is the director's fees before it was increased. But the month that we are looking for is for March 2024, of which it was already increased. So after the increase, we multiply by 1.08. So we are now saying 61,000 times 1.08. And we do that, we are going to see that we are going to get it as, let's try to see. We are going to get it as 65,808. 65,880. So 65,880 is the figure that we have after the increase. So this is going to apply for the month of, for one director for the month of March 2024. So to get for the 2 months, we are now saying to get for the 2 directors, this is for 1 director. So for 2 directors, now we are saying 65,880 times 2. We multiply by 2, we're going to get 131,760. 131,760. So this is the total for March. So we have to remove this 131,760. So we go to the other section and take the figure that we have with the list of balances and subtract that 131,760. So if you come here, you'll see that the figure that we are given here for directors' fees is 1,307,840. Then you subtract that figure that we got there. So we go to our answer section. So we say directors fees in the brackets, we are saying 1,307,840 minus 131,760. And then the amount that you are going to get there is 1,176,080. So this is what we have. Then we can go to our list of balances and try to identify another expense after that one. So after that one, we have identified director's fees, and now we've got audit fees, 69,720. Then for audit fees again, we go there to check any adjustment that is explaining about audit fees. We go to item 2. 2/3 of the audit fees were paid. The balance will be paid in March 2017. Right. We check the amount there that we have, and then we can go back there to try to come up with the one that is applicable. Then we have what audit fees 69,720. So this is the figure that we are taking. 69,720. So 69,720 is the figure that we have. And then we are told that this one, 2/3 of the audit fees were paid. So this is representing our 2/3. So the representation of our 1/3 is missing, which means it's an accrual. So we need to find out the 1/3 that we provide for the 1/3 in the answer section. We are supposed to show it by adding it to the 69,720. So it means the one that is missing, that is accrued, is 1/3. So 1/3 is the one which is missing. Is a question mark. So we use simple proportion. So we are going to say what we don't have is the numerator 1/3 over what we have, which is 2/3. And we multiply by 69,720 over 1. So we can just convert this fraction. Remember, this is the same as saying 1/3. We can just say this is the same as saying 1/3 divided by 2/3. And then if we remove, let's just try to remove that what we have there. So if you remove this division sign and put multiplication, it becomes 1/3 times, then we invert your denominator becomes the numerator, 3 over 2. 3 becomes the numerator, 2 becomes the denominator. So this is what we have. Then this one will cancel each other. So the fraction becomes 1/2 now. It becomes 1 over 2. So here it means we are saying 1 over 2 times 69,720. So we calculate it as such. Let's try to see what we get there. If you say 69,720, and then you divide by 2. You're going to get to 34,860. So here we have got 34,860. So this is representing the 1/3 that is not yet paid. 34,860. So we are going to add it. Remember, in accrual, we add it. So we add it to 69,720 to get the total for the period. So we come here, go to the answer section. So we are now saying here we are now saying audit fees. And we are saying 69,720. Then we add your 34,860. And then the answer that you are going to get is 104,580. So this is what we have. So if you go to our additional information, so before you go to additional information, let's just exhaust what we have in the list of balances. So we were looking at our audit fees here. So now we have commission income, we have stationery. For stationery, it's 68,300. Remember, when I calculate stationery, we say what was bought minus what is remaining at the end of the period, then we get stationery that was used. So in this case, let's check in terms of do we have anything that is at the end of the period? If you don't have anything, we take that figure as it is and put it in the statement of comprehensive income. But if you go to our item 5, it's saying on part of stationery, the same stationery used for the year is 58,520, which means it's already calculated. So we take the used stationery is the expense, 58,520. So we go there. So we are saying stationery. Sorry, it's not supposed to come here. We go to the expenses section. We're having our stationery, which is already calculated as 58,000. 58,520. Then we can go there and try to see if we have got any other in the list of balances. Right, after stationery, it's dividends on order shares, which does not fall under the profit and loss account. So we leave it. Then we remember that we have got the provision for bad debts that we identified when we are in the other income section, which they said it was already calculated. We were given as a calculated figure. Let's just try to see. Right, if you go to item 3, it's saying the increase in provision for bad debts by 6,500 was not recorded. So we are just going to pick this figure and put it there as our provision for bad debts adjustment, 6,500. So we are saying provision for bad debts adjustments. Provision for bad debts adjustment, we was 6,500. So this is what we have. And then we try to see again if you have got any other. We go to additional information. Remember, we are now under the additional information and try to see if there's anything again which is falling in the profit and loss account under less expenses. Remember, we identified provision for bad debt. So under that, we on item 5, they're saying electronic equipment was donated. So anything that is donated is an expense. So we have 22,400 being an expense of the donation that was made. Sorry, we calculated, this one is the gross profit. We calculated it and we got 64,000, if you still remember. when we made a proportion of saying 35% is representing 22,400. So we wanted 100%, and we said 100 over 35, and then we multiply by 22,400, and then we got 64,000. So this is the cost which was donated, which is going to be the expense. So we are saying donation 64,000. So we go there. And we say donations 64,000. And we have 64,000. So this is what we have. And then obviously we go back again to check if we've got any other, that is just 4 other expenses. So if you go back, you would see that we no longer have any other that falls under expenses. Then obviously, if you try to look at our other section, you'd see that the figure for operating expenses, we cannot get it since the insurance figure is not there, depreciation figure is not there, sundry expenses figure is not there. So we are going to get this figure as a balancing figure, starting from here. We have the operating profit being calculated here, and we have the gross operating income being here. So to get this one, we can easily get it. So you can just form an equation there whereby we are saying, if you say, if you come there, if you say your gross operating income, if you less your expenses, you will get your operating profit. You say this figure minus this one, you get your operating profit. So this is exactly what we want. So we want this figure because we have this figure, we have this figure. So we are saying 10,711,800 minus your expenses is equals to operating profit, which is here, which is 6,317,500. So we can try to make this one start with the formula whereby if you take it to the other side, it becomes positive. Say negative expenses. If you take this side, it becomes positive. Then you take this figure, this side, it becomes negative. Now it becomes 10,711,800 minus 6,307, 6,317,500. So we are saying 10,711,800 minus 6,317,500. And then you get your answer there, which is supposed to be for less expense, for operating expenses, we are going to get your 4,394,300. So this is the figure that is supposed to come there. Is our expenses figure. Which is 4,394,300. So this is what we have in terms of our operating expenses. Then here in brackets, you can just summarize the working, whereby we are saying 10,711,800 minus your operating minus your operating profit. Let's try to see, which is 6,317,500. Then we get that figure. So this is what we have, guys, according to this question. And we see that all the figures that are following are pre and up. So this is what we have, guys, according to this video. Those who haven't subscribed, please subscribe and share. Let's share the link to those who are concerned. Let's stay tuned and notified for more videos to come as we prepare for a final exam. Thank you for listening. We'll meet again in the next video. As for this video, I'm out.